Japanese index is trading with losses, giving up the gains that it made yesterday.
We basically look at the 40-day exponential, which stands at 47,887.
Now it's very, very close to around that 100 DMA. So it's going to be important to see whether or not Reliance Industries can see a bit of a bounce.
Weak set coming in from Voltas.
The US stay consistent like in the quarters before.
60 points lower on the Nifty, so 22,240 is where the Nifty is at.
The market has to kind of reconcile to the fact that that 15% number is at risk.
So they say that it's only a draft guideline by RBI.
I would say at the size that we are, 20,000 crores, and the segment that we deal with, 20% is quite a reasonable.
Our market share is close to 50%.
Our mix percentage has increased from 35% to 41%.
As far as we're concerned, there is a massive runway for growth as far as waterproofing is concerned.
Now, iPad Pro in itself has an updated camera system this time.
430 points higher on that one. It's outperforming majority of the benchmarks as well.
Well, that is the day so far, and it was looking better even half an hour back. It's looking a little worse off as compared to that. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surabhi. Nigel is joining in from the newsroom floor. Guys, good afternoon.
Hi, afternoon. But at least after 3 days of big losses, today you could say is a session of consolidation. So that's the
And at least mid-caps, for me, at least mid-caps aren't sliding the way they were yesterday. Yeah. There's some semblance of stability in that market, but then let me not speak too soon.
Well, that's right. And I think the one big boy that has been underperforming the last few days is Reliance Industries. It's putting in a bit of a fight. It's holding on to that 2,800 odd marks. So I think that one as well holds the key. But I think we are bracing ourselves. Next few sessions is going to be as volatile as ever.
Well, I mean, you can say off the lows and you could have left it there, but the last 15, 20 minutes of action means that you got to add one more caveat, right, off the highs as well. So look at that. It kind of tells you the story. So, early in the morning, the Nifty basically, if you want to just put this into context, retraced almost the full 61.8% retrace, of the move, 61.8% of the up move that we had seen. It almost hit that level of 22,166 and then saw a bounce. The low was 185 and then it saw a very strong bounce, which was basically at the high point of the day, 180 points off the lows. 180, that was super strong. But then since then, we've come off quite a bit. That number is no longer 100 points, but about 150 points off the, not 80 points from the high, but about 120, 130 odd points off the day's high as well. So a bit of a two-way kind of a market. PSUs, though, you want to pick out a spot or place which is doing the best. I think it has to be PSUs, energy, and all sorts of PSUs, metals, you name it. And you got 2-3 of these indices there on the PSU side. They're all the best performers. Bank Nifty, that is still holding that 40-day exponential, which is at about 47,900. And broader markets, as I think Surabhi said, it's doing well. You had 2-3 days of like 3.5-4% pullbacks, especially on the small cap side. And today, the last I checked, maybe there also gains have moderated. They have moderated, but they're at least up as compared to what we've seen lately. Rima.
And the advanced decline ratio is also positive. So we've got about 3 stocks gaining for 2 on the declining side, though the gap between the 2 in the last 30 minutes is narrowing a bit. In terms of sectors, the PSUs, as Prashant pointed out, after 4 days of losses, the Nifty PSU index is now back in the green and it's leading in terms of the gain. So the Nifty PSU index is up more than 1%. It's closer to the 2% rally, even the CPSC index. In that, the PSU banks is up 1.1%, while the Nifty private banking financial index is down close to about 0.8%. IT did well yesterday, but IT has taken a bit of a backseat today. The Nifty IT index is down 0.5%, and FMCG, which led the gains yesterday, is absolutely flat. On the whole, it's a consolidatory kind of a session.
That's what seems to be happening. And for what it's worth, the Nifty has also, it's been battling with the 20 DMA and the 50 DMA, and it's kind of somewhere in that zone. So that hasn't changed. In terms of some interesting reactions on the mid-cap screen, of course, you've got a couple of IT names. Sonata Software down 14%, still nursing that massive cut. Voltas is another disappointment, 5% lower. Pidilite is the one that hasn't quite hit the high notes after the quarterly performance coming in. So those are the big reactions on the way down. If you talk about movers and shakers on the way up, then the power financiers, they've had some good news. We'll talk about all of this as we go along, because REC in its call clarified that the projects that are backed by the government of India, that have the sovereign backing, Perhaps on those projects, these new proposed norms on higher provisioning, project financing, higher provisioning, they won't apply. And then there was a relief rally on those stocks. And a lot of that actually is still intact. So short point, broader market not bad. And we've still got a positive advance decline ratio. So holding on to that optimism, Nigel.
Well, that's right. You know, one stock that I'm just looking at is Canara Bank. Just take a look at the way the stock has collapsed. You know, the numbers first look was looking pretty okay. But then, as Abhishek told us, you know, the guidance was a little bit weaker than what the street was working with on in terms of loan growth. Also, the slippage number, if you look at it on a sequential basis, is a little bit higher by close to 300 crores odd. So I think the street got disappointed by that. So from the high of the day, that stock has corrected close to around 5.5%. Intraday chart comes up for you of Canara Bank. It's now currently moving to the low point of the day. Well, how do you position yourself for the final hour of trade? Mitesh Thakkar is back with us. Mitesh, it's that sort of a day, right? If you bought the dip, you would have been making some money, but you need to exit as well at some point of time, because from the top, we have seen a bit of a sell-off.
Nigel, we did buy the dip. Good afternoon, and we did exit actually. You know, my view was that we may not break this 22,200, 22,180 zone, and we'll get a bounce back, but will not be start of a new up move. So I think that's the way it's played out, fortunately. So a good day in terms of index trade, but I think I would be looking at 22,200 closely, because the bounce back has again got sold into. So as long as we are above that, we are not closing below that. I think there's a chance that, you know, 1-2 day of mild choppiness, and if we don't break 22,200, then we'll get a sustained up move. That will be some kind of failure of breaking below support level. But yeah, that's the way we'll approach the index. On the stock side, AB Capital for me is a buy with a stop at 212 for targets of 230. And Adani Ports is on the negative side, so keep a stop just above days high of 1295 and look for a target of around 1255.
Got it. Mitesh, we'll come back to you for more and sort of talk to you about how things are looking across a variety of stock sectors. But let's focus on PVR Inox. So now PVR Inox has unveiled its first super premium director's cut cinema. I mean, it's a 7-screen multiplex. The visuals are on your screen in Kopa Mall in Koregaon Park in Pune. It's an upscale locality in Pune, and PVR Inox is now a sort of, I think this complex now accommodates 751 guests, according to the press release that I have from PVR Inox. And, you know, it basically takes their footprint, PVR Inox's footprint in the western part of the country to 367 screens in about 79 cinemas. Mr. Ajay Bijli is joining us now, Managing Director at PVR Inox. Mr. Bijli, good afternoon. Great to have you with us here. Thanks very much. Prashant this side.
Hi.
Congratulations first up on...
How are you?
I'm well, sir. Thank you very much. And I can see that I think you are in one of those cinema halls. I'm not sure if it's a director's cut, but... you know, looks plush. So congratulations to you, your team, as you sort of, you know, open these new screens there. But just sort of put this into context for us.
Thank you.
Because, you know, it's an old conversation we've had, which is that, you know, it's a sector, it's an industry which is actually going through a fair bit of upheaval, change, transition, whatever you want to call it. But you're sort of aggressively increasing your footprint across the country with these premium launches. So just sort of, let's start there, Mr. Bijli. Go on.
Well, you know, first of all, thanks for having me. I'd just say that I'm not aggressively sort of opening these properties. I'm just being very careful which catchments still have an untapped potential for a product. And not everywhere it's premium screens. Only 14% of our portfolio is premium screens, and this is one of them. It's just you have to study the market, see the demographic, and then you know, like Koregaon Park, the whole mall, the positioning is very affluent, and which is the reason why we're opening these what we call premium large format or luxury format cinemas, because India is a disparate market, and if people want to come out of their homes and watch a movie on the big screen, it needs to be substantially different from watching it at home. So I think we are just trying to make the cinemas as experiential as possible by either having cinemas like this, which are all recliner based, or having formats like IMAX, ICE. We have an ICE here as well, which is an immersive cinema experience, or 4DX or PXL, to create that massive difference between going out into the malls and seeing on the big screen and watching it at home. So I think that's the rationale behind you know, opening these. And you know, I would say post-COVID, in fact, Indian industry is the only industry which has done better than any other market in the world. and our total box office has gone to 12,000 crores last year. So I think I remain bullish. Of course, it's taking a little longer than expected. The number of people who are going to the cinemas, not PVR INOX, throughout the country have become lesser than what they were pre-COVID, but the number is only increasing year by year. So we are in this for the long run, not just looking at 1 or 2 years of business, but a much longer period. Out-of-home entertainment is here to stay.
Oh, yes. We couldn't agree more, Ajay. We love to go to the theatres ourselves. It's just such a relief after COVID, right? But, just to talk about these premium formats that I think you started launching from Delhi and now you're in Pune. What's the pickup like? And from a business potential perspective, let's say out of your total revenue pie, do you see them contributing, 5%, 10%? And by when? The reason I ask is that this should have a direct positive impact on the margin as well, right? So just talk us through the business and financial dynamics, the expectations that you're working with now.
Actually, to be honest, that's a good question. We are finding that our EBITDA margins and our returns are better on these formats. But as I said, you have to be very careful because India is such a price-sensitive and disparate market. I just can't open them anywhere. We really have to see the demographics where we open it. And as I said earlier, there are only 14% of our portfolio so far. 86% of our portfolio still is at about 200 rupees ticket price. It's a very small part of our portfolio. Out of 1,744 screens, 14% is at, I don't know what, maybe 200 odd screens are this. But slowly we're inching more towards finding those catchments, whether it's Delhi, Bangalore, Pune, even Chandigarh, various other cities where people want no compromise on their experience once they go out. At the same time, I need to have affordable, aspirational offerings as well, because only then we'll get the numbers. There are lots of cities, we are in about 120 cities now, where the ticket price cannot go beyond maybe 200 to 20. Flexi pricing, I'm talking about morning, evening, weekend, weekday. So we have to be careful how to approach this heterogeneous market of movie consumption in India.
But you're at 14% right now. I mean, do you have a target in mind that you'd like to maybe go up to 18 or maybe 20 over the next 2-3 years? Is there such a roadmap in place?
Absolutely. Yeah, I mean, it could be a number could be like that, and it's not just creating new cinemas; it's also adding recliners. In a lot of smaller cities, medium cities, we are finding that people are wanting to repurpose our cinemas from normal legroom of, I won't get into technicals like 1100 millimeter to 570 millimeters to straightaway to recliners, which is like, 2 meters legroom. So that also becomes part of our premiumization strategy. It's not just building all screens luxury, but within a 6-screen complex or a 7-screen complex or within one auditorium, adding 2, 3, 4 rows of recliners. So that's something else that we're doing because, as I said, there's an aspirational consumer in every city, every town, and he doesn't want to compromise his going out. Once he's made the effort and decided I want to see a movie on the big screen, he's saying it better be different from watching it at home.
Ajay, is it possible to give us an indication of the occupancy of what is classified as the premium screens versus the sub 200 rupee category screens? What's the difference?
My results are getting declared on the 14th, and there's a huge embargo on me to say anything about numbers. So I'm very careful about what to say because 14th you'll get to know everything, and there's an interview lined up with you as well.
But is the occupancy higher on the so-called premium screens?
It's higher. It's higher.
Okay. And how long does it take, considering the cost involved in setting up a premium screen, whether it's any sort of an experiential screen? How long does it take for you to break even at the current occupancy levels?
Well, it doesn't matter whether it's a screen where the ticket price is 150 rupees in, let's say, Ujjain or Indore or Nanded or Aurangabad or Latur, or which has been capitalized, let's say 2 crores or 2.5 crores a screen, or it's a luxury screen which is capitalized, let's say 4.5 to 5 crores a screen. We still look at a payback of about EBITDA payback of about 4 years, because the cost structures, the revenue structures, the capex, everything. So my return criteria, investment criteria doesn't change.
Okay, all right. Hi, Ajay. Congratulations on this new format, and I've been lucky to visit one of those, one of those venues, the Latur PVR. A few years ago, I'd gone and seen a movie out there. So happy to see it out there. You have adopted these ad-free movies in the premium formats, right? Will the ticket prices, food and beverage be able to compensate for this ad loss that you will see?
We are experimenting with a lot of things. As you know, 349 passport is there, 99 rupees unlimited offer is there. And we're just trying to listen to the consumer as much as we can. In about 10 properties only, we have tried this experiment, and we'll see how it goes. So far, the results are very positive because, ads were about 17, 18 minutes. Now they're getting compensated by one extra show. And on streaming services, you have freemium and premium services where ads are there or not there. I said, why don't we experiment with 10 properties and see how it goes. So far, the consumer experience has been very positive, but we'll see how it plays out. I mean, we are still showing trailers and some mandatory and statutory slides that we have to show. But other than that, it's ad-free. And but we'll see how it plays out, because ad revenue is a very important component of our overall revenue mix, and we don't want to hit it. But let's see how it goes. In few properties, very, very premium, maybe we'll carry on with it, and there the results are good, very good.
Okay, Ajay, just one last point. I mean, I know you can't talk about numbers, etc., because earnings are around the corner. But we get the movies and how they've done.
I'm like really nervous with this interview, by the way.
We won't put you on a spot at all or ask you to talk about something which you can't, obviously. But is the pipeline looking in the fourth quarter, which we will report numbers? It's been a little, because we get which movies have collected how much. So there are no really large blockbusters in that sense. So the street kind of anchors itself to that. When they look at what to expect, and analysts put out previews, etc. But is the pipeline for Q1 with the quarter we are in and beyond looking a little more firmer? Looks more promising?
You see, I've been in this business 34 years now, and since time immemorial, it's very difficult to predict by just looking at the what is the pipeline. When I was looking at March, I saw Crew. It did not look promising, and it's done incredible numbers. I saw Lapata Ladies, it's done incredible numbers. Then Shaitan came, it did incredible numbers. So you never really know what movie is going to click, because we haven't seen the film, we've only seen the trailers. We go by the past reputation of the actors and the directors. So pipeline is what it is. Of course, due to elections, not much is coming till the end of May. And then suddenly, after the results, there's a huge flow of films. 1,700 films got released last year. This year, 1,500 films are getting released. So it's difficult to predict what's going to do well or not. But I continue to remain optimistic that there's going to be a lot of sleeper hits out there, because a lot of focus is being put to scripts now. And people are, I just saw the trailer of Shrikant, which is releasing on Friday. And it's looking very promising. So as I said, pipeline is what it is. But you never know what gems and what big hits will come out. And my definition of a blockbuster is not the production cost or the star cast. It's what the consumer, the verdict that the consumer gives, and then the revenues that they generate. So I'm still very optimistic about the pipeline that I see.
Absolutely. Well put. Ajay, we'll leave it there for now. Thank you very much for your time, and congratulations once again to you and your team on that new launch, and speak to you soon again.
Thank you.
As you release the numbers for the quarter and the year as well. We'll talk then. Well, Hero MotoCorp numbers are at the bottom of the screen, and Sonia is standing by to tell us how they look. Sonia.
Well, the numbers are absolutely in line with what the street was estimating, so there are no surprises at all. The margins have come in at 14.3%, and this is much better than what they did same time last year. And it's actually a very healthy growth that Hero MotoCorp has seen. The volume growth for Hero MotoCorp has been in excess of 10% in Q2 in this quarter, coming in at about 14 lakh units. So that is what has led to this growth that we've seen on the top line. The net profits as well, largely in line with estimates. 1,000 crore net profit, 1,016 crores is what they've seen. seen, and the revenues as well about 100 crores higher than what the street was estimating at about 9,519 crores. That is a growth of almost 15% that we've seen on the top line for Hero MotoCorp. The important bit is this, right, that the stock is up about 1% because there's valuation headroom that Hero MotoCorp has. It is the cheapest stock now in the auto sector. If you compare it to peers like both Bajaj and TVS, Hero MotoCorp trades roughly at around 18 times, versus peers trading at about, like Bajaj trading at 28 times, TVS at 37 times. So the scope of growth is larger for the Hero MotoCorp stock, considering that there is valuation headroom there. Largely numbers in line with estimates, 14.5% top line growth, 25% EBITDA growth, and the bottom line as well looking good. Would be interesting to know for the management about what the tailwinds are going ahead, because they spoke about it in their press release where they say that there are multiple tailwinds for the sector going forward. The one thing that we notice is that rural demand has picked up, especially, in the entry-level motorcycle segment. So because of that, you've had sort of a good response coming in there. But Gurmeet Chadda is also with us, so perhaps you'd want to go across to him. For now, the numbers are looking quite good, largely in line with expectations, but there is valuation headroom, so that's something the street likes.
Okay, all right. Sonia, thank you very much. So Hero hitting the mark when it comes to the Q4 numbers. Let's, as Sonia said, Gurmeet with us, so let's straight away take it to him and get some questions going. Gurmeet, hi, good afternoon. Great to have you on the show. So, no disappointments with Hero. Okay. So, no disappointments with Hero. What do you make of it? I mean, its other peer, Bajaj, has, of course, had the bigger rally, the bigger run. But if you want to allocate fresh money, first of all, will you do that to a two-wheeler stock? And then, between the four, there's TVS as well. TVS, we'll hear from them as well today. TVS, Eicher, Hero and Bajaj. What do you like?
So, we were lucky we got decent returns in TVS, not only in TVS Motors, but also one of the companies, which was Sundaram Clayton. We had a three-way split in the company between a holding company, a preference share, and the auto ancillary. Hero, if you see, there are two concerns here. The 125cc segment, which they used to do very well, is where they really lost out. And 30% of the industry volumes now are 125cc segment. That's where your Pulsar, TVS Rider, they gain market share. Now with this extreme 125cc, they seems to be pulling it back. But sometimes what happens is the initial launch, response is good, and it then tends to taper off. We probably need to watch out for a couple of quarters more. And as an industry, if you see, Surbi, we used to do 2.3, 2.4 crore units of bikes in the year. We're still not past that. That was 2019 number. So I think it's by April numbers are good. There's a good monsoon season. But two-wheeler as a category, the volume growth for the industry is not less. So tactically, maybe yes, as Sonia said, you are 16, 17 times earning, maybe 3-4% dividend yield. It may do a bit of a catch-up. But structurally, I think it's the four-wheelers probably which will add more wealth over maybe the medium term.
Gurmeet, do stay on. We need to slip into a very short break. We'll come back and discuss more stocks.
Welcome back. So absolutely quiet and flat on the benchmark indices. That's what this afternoon is all about. Bank Nifty is under pressure. That's one. But the mid-cap index is doing much better. So the trends are really all over the place. Let's keep that conversation going. We, of course, have Gurmeet Chadha with us from Complete Circle. Also, Manish Santhalia, CIO at MK Investment Managers, is joining into the conversation. Welcome to the show, Manish. Good to have you on, as always. Let me start with the basics. What have you made of the earnings season so far? The upgrade to downgrade ratio, etc. Have you started looking at that kind of an analysis? And then, therefore, what's the report card saying?
Except for oil and gas and metals, the earnings growth so far, or just about 3 or 4 days back, was around a 15% sort of an earnings growth, which to my mind is all right, given that the overall earnings expectation for this quarter was just about 5 to 6% on a YOY basis. So in that backdrop, I would believe that few sectoral disappointments, which was quite expected, was IT. It was muted set of numbers. Banking results have been good, both from private sector as well as the public sector so far. You could say that deposit accretion for the private sector, which came in as a positive surprise, could have some element of cyclicality, which is normally the case for Q4. And we'll have to see the continuity of the deposit growth accretion going into the first quarter. If that happens, then obviously the results would reflect in the market cap also for private sector banks. But otherwise, I think pharma has been good. Metals and oil and gas was expected to be somewhat on the negative side. All in all, I would believe that numbers are at par, in line with expectation, nothing to be too disappointed.
Manish, afternoon. What about the impact of the elections this time? There appears to be some nervousness which has crept in over the last couple of days. The FIs are selling in the market. Is it time to maybe increase the cash in the portfolio, or just sit tight, ride it through? Any changes in the portfolio composition because of the election cycle? How are you going to assess the impact of the elections?
I think the best strategy is to get fully deployed. And as is the case with every election, you start with a very positive number on whatever the expectation is. So the NDA started with a 400 sort of a seat. Phase 3, it comes down to that they are not going to get even 272. And, as we approach the 6th phase or the 7th phase, you could end up being, somewhere in the region of 330 or 350. As long as the number is more than 272, I think the markets would read it very positively. And a whole lot of money sitting on the sidelines waiting to get deployed to see the new government. So in that backdrop, I would believe that I'm not negative at all. In fact, you would use all the weakness in the markets to either, get more subscription into your funds, or if you have funds, to get it fully deployed.
Okay. Hi, Manish. Good afternoon. Good to see you. When fully deploy, that's the way to look at it. And, I think the point you make is very important, because the ruling BJP will definitely get a majority, going by what we're expecting. So deploy and, buy stocks that you like. What about the auto space? You just had Hero MotoCorp's numbers that came in a few minutes ago. And that stock is surging away. It has some valuation comfort as well. It's been a bit of an underperformer in comparison to its peers. How are you all positioned on the auto space, particularly the two-wheelers?
So two-wheelers is a positive stance as opposed to four-wheelers. But it's not a comment specific on Hero MotoCorp, but I would believe that, the premium segment of the two-wheeler space, which is basically 350cc to 500cc, that segment of the market is actually growing at 70-80%, vis-a-vis the overall growth of around 5 to 8% for the two-wheeler segment as a whole. So I think the key to focus out here is the premium segment of the market, and companies which are positioned in that segment of the market, you generally would have two broad names. You would have Bajaj Auto, you could have an Eicher Motor out there. They would be more well positioned in that space. That segment of the market, the premiumization that is happening, would reflect in numbers both on EBITDA as well as PAT, and of course the market cap.
Gentlemen, good afternoon. Manish and Gurmeet. Gurmeet, what have you added to the Complete Circle portfolio from the last time we spoke? Give us some Give us a sense.
So a couple of things, Prashant. We've been believer of buying on dips. I agree with Manish on a point that you should not take extreme calls on the portfolio because things we are not certain of. We should not try and bet big money. That's not the rule of the investing is. We are doing a bit of a rebalancing. I think small mid caps had a stellar rally, especially in defense, especially in few segments of PSUs where we made a lot of money. Some auto ancillary stocks. So it's just a bit of rebalancing it, not really exiting it. And maybe keeping some powder dry. It helps in volatility in terms of leading up to election. We've added few companies. One company we've added is in waste management, which is Ganesha Ecosphere. Government has come with a clear guideline of using 30% recycled content in a lot of categories, including PET bottles, including MDPE, where the drums, etc. are made. So it's a bit of a regulatory opportunity. So the demand is, let's say, 5 lakh tons for, let's say, something like rPET, and the industry capacity is pretty low. So we've added Ganesha Ecosphere in that space. We've been adding some auto ancillaries on dips. We believe that especially the ones which are playing the premiumization and content per vehicle theme, includes Sandhar, includes bit of Uno Minda, Sona BLW. We've been buying them basically on dips. Adding more market infrastructure plays like CAMS, CDSL, etc. on dips. Of late haven't added because the stocks have run up quite a bit, but we did add when we got 1500-1600 levels to CDSL. And we are adding some banks. We believe that with treasury gains coming in June with bond inclusion, I think banks are and very reasonably priced. Most banks today are getting at 2.5 book value in private space, and a lot of PSU banks are around 1 book value. So my sense is that leg is where the EPS growth will be maximum over the next 2 quarters, and I think that's what we're trying to add in the portfolio.
For your clients, Gurmeet, the NSE recently gave out a bonus, and there was that dividend as well, and I think arguably they should do about 220 rupees in earnings this year. So it trades at roughly about 20 times. The listed players are at 40, 50. Do you have the mandate to sort of add private companies as well to recommend? And no,
not really. You can't do that.
Maybe on the wealth side.
In a PMS, you can't do that.
Of course.
But yeah, we do. And we have been actually, being honest, we've been selling NSE since 900 levels, to be honest. And I think we've had a really good ride there. And I think it was a no-brainer. As I said, I do the numbers. Prashant, it's very secular. And I think NSE still is pretty reasonable. See how BSE has gone up. But I think one risk there is the regulatory action on derivatives. Our derivative values are 400x to cash. They're talking about increasing trading hours. I think there's a bit of a pushback there. Some regulatory intervention will come with so many expiries and all. That's one risk. So I like depositories and AMCs and RTAs more versus exchanges at this point.
Just to comment on this, Prashant, yesterday on Trading Hour, we were discussing exactly this. The fact that at least, the Damocles sword that keeps hanging over our heads, that extension of trading hours, it seems to be sort of off for now. So the view from Asit Mehta, Dina Mehta, as well as HDFC Securities MD Dheeraj really, both were saying that in some ways, I mean, not that it's the only reason, but in some ways it has perhaps a linkage with this whole talk of excessive speculation. So you perhaps want to limit that and then look at a healthier market, if at all. I mean, SEBI wants to push through longer trading hours. I just wanted to put that.
Not more, at least not right now.
But just to bring Manish into this on it, Manish, give us your view, not on the trading hour debate, or maybe that too, if you have a view there, but the fact that market infrastructure stocks and asset managers, wealth managers, I mean, these stocks have really shot through the roof. Now, how much of a runway still exists? Perhaps it's still early days, but then what about valuations? And what kind of multiples are you still comfortable with when whether it's an Angel One or an Obama, or, a lot of the companies are actually your peers as well?
Well, as I've been maintaining that all platform businesses will have non-linear growth. And as far as the financial markets are concerned, there's no better visibility than this sector. So if we talk about, let's say, exchanges that we were dealing with, so it would be very reasonable for a market like India, which is currently at closer to $4 trillion economy, to be at $7.5 trillion economy by 2030. In all probability, your volume levels on stock exchanges are nowhere going to be what they are today. It's going to be much higher. So, I mean, just for some simplicity's sake, you could expect a 10% growth between now and 2030 and even beyond that, because we are nowhere close to being a developed market just yet, and trading volumes are much higher out there. So a 10% growth till perpetuity, given that cost of capital is 12% and your growth rate at 10%, and that year's cash flows, so it's basically K divided by 1 divided by K minus G. So 1 divided by 12 minus 10, that gives you roughly a 50p. So that year's cash flow into 50p should be a justified valuation. Now, whether it means FY24 that you want to focus, FY25, FY26 is your call. But sitting in FY24, you would look at FY26. So I think the maths just adds up. It's just a rolling figure on the profit numbers, net profit numbers going into the future. And that would work well for all platformized businesses, particularly when it comes to capital markets, RTAs or depositories, and these are duopoly structures. You can't have enough competition coming in these spaces. And, whether it be do-it-yourself model in the case of broking platforms, or whether it is, let's say, a phygital model, partly digital, partly phygital. I mean, all segments of the market will likely grow because it's a financialization of savings scheme. And in that backdrop, I think wherever is the comfort is where you'll actually be able to park your money.
Okay, all right. Manish as well as Gurmeet, appreciate you joining in and discussing all those stocks and themes with us. Wishing you all a good rest of the day. Well, getting back to the markets, two stocks are in focus. Hero MotoCorp that just came out with a set of numbers. The stock is now up close to around 4%, firing away. And Bharat Forge is up more than 12%. We'll get chatting with the management very, very shortly. So both those two are the stocks of the last 90 minutes or so. But it's a good time to get in. Nimesh is going to tell us about D-Street Chatter. Well, Nimesh, a flattish day, so to call it. You bought the dip, you made money. You sold the top as well, you made money. So it's that sort of a deal. Fair bit of volatility.
Is it that easy, Nigel, to buy the dip and to sell the top? It's a very, very tricky market. Honestly, I've been talking to a lot of dealers and market participants. Last 2 days have been a bit of a shakeout for a lot of traders. But again, it's not an easy market to trade now. And this volatility is likely to be here. With every phase of elections, you're going to see a lot of numbers coming up. And that will have a question mark on which way it will swing. So I guess that volatility is going to be for at least for the time being. That's the overall feedback. I guess from a market point of view, the good part about today's market is, again, for the second day running, 22,100 seems to be a very strong support on the Nifty. So that's acting as a bit of a strong support there. So even today's market, we bounced from those levels. But I guess from a flow perspective, while the Nifty bank is looking under pressure, there is selective buying into the Nifty bank stocks as well. So some private bank stocks continue to be well bid by large institutions. For the last couple of days, I'm getting a feedback that Kotak Bank is well bid by large institutions. So that trend continues in today's market as well. And as you rightly pointed out, there are sharp reactions to earnings as well. Hero MotoCorp is reacting as well as Bharat Forge as well. So big reaction to that. Earnings continue.
Okay, all right. Nimesh, I think we have a few stocks as well that are on your radar. If you could tell us, run us through the list.
Okay, so in terms of individual names, the first stock on my list is GAIL. That's been buzzing on trade, good volumes as well. I understand there are buy flows. Additionally, there was a UBS report, and they further raised the target price on GAIL to 250, and they expect very strong earnings. So that's the reason GAIL is buzzing in trade. The second name is Biocon. There is going to be a small market at close buying flow at a leading FI desk, and that's the reason why since morning we've seen a bit of a rally in Biocon as well. The third stock is Imami. That's been seen a big move in the last couple of weeks. It's almost sitting at 52-week high. Now, I understand along with results, you can expect a corporate development as well. That's the reason why Imami is buzzing. And the last is Titan. For the third day running now, post-earnings, there has been a selling pressure. And even in today's market, while the stock has corrected sharply, still there are sell flows. I understand a leading long-only fund seems to be an active seller as well. Hence, Titan is under pressure today.
Thank you very much for that, Nimesh. We'll get into a break. On the other side, we'll get you a few BTST calls from our technical experts. Stay tuned.
Welcome back. Well, the stock of the day really has to be Bharat Forge. The stock is flying away in today's trading session. Very, very strong showing in quarter four. And the street likes the commentary as well that's coming in from the management. Well, let's get straight to the management then. We have Mr. Kalyani who joins us on the show. Hi, Mr. Kalyani. First of all, congratulations. A good set of numbers. The street likes the guidance as well. Now, on this sort of a base, what kind of a revenue growth can you deliver on the base that you've delivered for FY24? So for FY25, what is the revenue growth? And also the defense vertical, that's picked up big time. That's already clocking close to around 1,500 crores in FY24. For FY25, what's the contribution from there?
Well, we have almost a 5,000 crore order book right now. 80% of that is exports. And remember, that does not include the Indian artillery gun orders, which I have yet to finalize. So that's, once that happens, that is likely to be another 2,000-3,000 crores. So we have a very strong order book. We have developing large export customers and a lot of new technologies in our own company. And the big advantage is the government of India's big push that has been given for exporting defense products is really helping.
So what could be the execution? So order book is looking good, plenty of opportunities ahead as well. Revenue on a consolidated basis and from the defense vertical in particular, since you're sitting on a big order book and since you're going to get more orders as well.
I would say we would grow anywhere between 50 to 60% on last year's execution.
So that's on the defense vertical, right, sir? 50 to 60% is on the defense part of the business.
Defense vertical, exactly.
And on the for the consolidated company, what should you do? I think this year you did high teens. What are you looking at in terms of growth for the company on the whole?
It should be pretty similar. See, we have three verticals which are now kicking in very well. Our component business is doing well. Defense has really bolstered things up in a very good way. Our industrial vertical, which is our casting business, has grown 30%, and we expect to see similar growth coming in this year. So, and we still have two more verticals which are part of our whole, transitioning or pivoting away from just being a component maker. And that is, one of them is our overseas subsidiaries in the aluminum business. And we hope by end of this year we will have both of them making profits. And our electric mobility vertical, which will also, I think, start showing some traction.
Mr. Kalyani, hi. Good afternoon, Prashant here. Just to go back to the defense business, so you're saying revenues were about 465 crores. You're saying you'll grow for 50 to 60% in FY25 on top of that.
The revenues on Q4 were 200. That the number you gave is for Q4, not for the whole year.
Q4, correct. No, you're saying that you'll be able to grow.
Revenues were about 1,500 crores, and I think we will do about 60% more than that for the next year.
What about at the EBITDA level? Because I think, as you say, while top line growth has been pretty strong, at an operating level, for the quarter, the business did about what? I think about 12 odd crores or so. Could you give us a sense of what the number may look like for the full year?
No, the EBITDA is very strong. Don't worry.
Could you give us could you guide us, sir? Like the top line, which you said.
EBITDA in the defense business is better than the EBITDA in the component business.
So on the whole for the market, can you tell us what's changed in the last 3 months? Because when you came out with your Q3 numbers, you had said expect the growth momentum to moderate in both domestic and the export market in FY25. The oil and gas segment is weak. There is a decline in US Class 8 production volumes, etc. And now you're guiding for, significant growth in FY25. So on the whole, there seems to be a big change in the body language, the management commentary. So can you tell us what's changed, sir, in the last 3 months?
And three things have changed. Number one, in the last 3 months, we got almost something like $500 million of export contracts on defense. So that was a big change. And as far as the U.S. market is concerned, the big change there is all the OEMs that we are supplying to all have given very positive guidance going forward. So if you see the guidance of Volvo, Daimler, Packard, all these guys have given an extremely positive guidance, which was not so, 3-4 months ago. 3-4 months ago, the general tune was that U.S. was heading for a recession. So, and also we have been able to increase our market shares in that market. So overall, everything is looking good. We are growing in the passenger car business. And, basically, if you see Bharat Forge as a company, our whole strategy has been to develop technology and create leadership with that technology and innovation in creating new products. And I think defense is a good example of how we've been able to do it. Of course, we've been working hard at it for more than 7-8 years. It hasn't happened overnight. Similarly, in our normal business, we have a lot of new things happening, which you will see in the next few quarters. And we are very clear that we will turn around our overseas business this year completely.
So the US business as well and the international business will be a big turnaround in FY25, Mr. Kalyani? The US business will turn positive?
Business will make profits in the quarter 4. The European business will make profit for the year, sure.
For the year, okay. And just to go back to that defense point, which you said, where you told us that it's much better than the other segments. Is it possible to put a broad sort of ballpark number there, sir, on the EBITDA side on the defense?
I would not like to put a number. All I can tell you is, in this business, if you own the IP and you develop your own technology, then your profitability is much higher. If you are going to do this product with somebody else's technology, then your profits are much, much lower, which is what you see in the industry in general. So I think in our case, all the products are our own. We have the IP, we develop the technology, and therefore I think we do very well with our costs and with the way our margins come out.
Okay, all right, Mr. Kalyani, we'll leave it there. Thank you very much for your time, sir. Appreciate you joining in. The market likes what it's hearing and what you, of course, already said. 15% higher on the stock. It's looking very, very strong. 14.25, 14.30 is where Bharat Forge is now trading at. The other big mover today, I think, is KEC. Again, very strong commentary there on the call. And that stock is also surging right now. So two big, really result reactions coming through. Mitesh Thakkar is with us with a quick sense of what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
Prashant, I have a BTST on, STBT on Berger Paints. I think that's closing with some kind of weakness. So take a stop just above levels of 506.5 and look for 490 as the target. And the other call which I have is the stock which you're just discussing, Bharat Forge. I think what a breakout with volumes and good news. So they should see continuation. So BTST here with this, or maybe even a buy here with the stop below 1395 for targets of 1500.
Okay, all right, got that. Thanks, Mitesh. By the way, speaking of stocks that are moving higher, look at Avenue Supermarts. Remember, Avenue had a good quarter this time around where there were clear signs of growth, and now the stock is up about 3.5%. That's one. The other one that's reacted very well to numbers is Balaji Amines. That's Avenue, sharp move on the stock right now. The other one is Balaji Amines. Results came out a while back and about a 10% move on that stock as well. So some interesting reactions playing out. Well, let's say hello to our next guest. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, joining in. Mayuresh, thank you for being with us. So tell us, today is a day of outsized reactions all over the place. A lot of mid-caps, actually. We were discussing Bharat Forge just now. Let me start with that. What is your view on the stock?
Afternoon, Surabhi. Thanks for having me on your show. I think as the promoter was saying, Baba Kalyani himself, he sounds very, very optimistic and bullish in terms of all the key verticals expected to do well. He's sitting on a defense order book of 5,200 crores that is to be executed over the next few quarters. Again, within that segment itself, both the domestic demand and the global demand on defense, with the margins that can come through, can propel the kind of growth that he was speaking about, 40-50% growth on the base that he's already created on the defense part of the business in the next financial year. The industrial castings business, he's diversified into a lot more industries. So Bharat Forge has got fresh orders in excess of 400 odd crores. The execution is improving. And therefore, I think a combination of all these factors is going to propel margin growth. And so if you look at the commentary generally for most forging companies, Class 8 truck demand seems to be coming back on track. The diversification that they have been doing over the past few years, specifically in railways, defense, that creates an additional lever in terms of both the margin performance and the quantum of orders that they can receive. And the last bit, again, in terms of fabrication, in terms of castings, in terms of new geographies that they are tapping, I think it's going to be very, very interesting in terms of a very consolidated play. Again, net cash of almost 800 odd crores. The EPS-RS rating look fantastic as we see it at markets with India. So I think these forging companies probably look well. Bharat Forging, MF Forging, even the instance of Arctic Forging as well.
Do stay on. Mayuresh, need to slip into a very short break. We'll come back in about 9 minutes left for markets to close.
Welcome back. Looks like we're set to end in the green, at least in today's trading session. The Nifty Bank underperformed, but Reliance Industries has done a relative outperformance. Mayuresh Joshi is still with us. Mayuresh, you know, we have Canara Bank that came out with a set of numbers, and that's the calamity of the last 2 hours or so, because the numbers first side didn't look so bad, but the finer details, the guidance, the slippages, that's something the street didn't like at all. The stock is now down close on 7% from the high point of the day. Your view?
Afternoon, Nigel. I think two bits. One, I think the guidance is something that has clearly disappointed the street because prima facie, I think the numbers looked pretty reasonable. But again, going by the guidance, the expectation largely now gets built in that they might not be able to deliver what they have probably been doing over the last 2 years. On that part of the business itself, when you talk about PSU banks, I think something that we continue liking within this space is Bank of Maharashtra at MarketSmith India. I think the numbers were pretty solid. They are continuing a very solid performance quarter after quarter. The management commentary was very reasonable as well going forward. And a large part of their expectations that are now getting built in terms of both the slippages and the restructured part of the book has largely been captured into with the very strong PCR that they have probably been positioned, have been positioning themselves for the past few quarters. And a large part of the expectation also is that a large part of the upgrades and the recoveries that can come through can also aid bottom line growth. So yeah, I think the management commentary for Canara Bank tad bit disappointing. But we continue liking Bank of Maharashtra within the mid-cap PSU space.
If you could pull up a 1 month or a 3 month chart of Voltas. First, there was a lot of excitement at the beginning of April when the company said that they've sold about 1 million units in FY24. The street, got very excited. But now when you see the Q4 numbers, Mayuresh, they've still lost, market share in the quarter gone by. What are your thoughts on Voltas and the entire category?
So afternoon, Rima, I think the heat wave that is currently on, I think a large part of that expectation was that there will be a substantial pump up that might happen in terms of the refrigeration unit, specifically the unitary cooling solutions unit. But I think that has not played up to the expectation as far as Q4 is concerned. But as we head into Q1, I think there will be a substantial improvement on the unitary cooling side of the business. And then let's not forget, I think the other two parts of the businesses that they probably carry. The industrial segment, the order book remains robust. There is expectations of good traction happening on that one. And even the engineering products and services business carries a decent amount of order book as we head into the next few years. Obviously, the kind of moves that we've seen on Voltas over the last few weeks have been substantial. The disappointment obviously is based on Q4 numbers, but Q1, in my opinion, should be relatively better.
Okay, that's Voltas. Mayuresh, finally, before we let you go, I think the highlight so far this week has been the absolute surprise from the FMCG pack, right, when it was least expected. What have you made of things, strong management commentary, and, among some of the key names, Dabur, Marico, and the likes, Godrej as well, which ones would you like to buy at the moment, if at all?
Yeah, so I think we definitely have Godrej on our radar. We will also have Tata Consumer on our radar as well. Extremely pleasing and strong commentaries. You're absolutely right, Surabhi, at the fag end of the result season as far as the rest of the FMCG companies were concerned. And I think a large part of their earnings recovery will come in through a normalized monsoon, which is expected, which will lead to significant amount of rural growth coming back. And as rural growth comes back, both in terms of volume and value, I think a significant bump up in terms of earnings growth from the second quarter or the second half of this financial year should largely start getting built into. Input cost inflation has come off to a large extent, and to that extent, as the leverage part starts playing out, both in terms of our volume and value, with urban holding up, rural catching up, I think the valuation multiples will also probably see some element of justification based on FY25, FY26 multiples as well. I think all these companies that I spoke about, Tata, Godrej, the PSRS rating look fine, the institutional holding looks strong from our viewpoint at MarketSmith India. And a few of these companies should definitely be on your watch list.
Okay, Mayuresh, we'll leave it there. Thank you very much for your time. It's a pleasure having you with us here on CNBC-TV18. Good chat, as always. The market will end with about a 5-6 odd point change. And that's it. So 22,300 is where we are at. And it's very finely balanced by after all of that up and down. So big slide in the morning, got to an important kind of level, big near 200 point bounce from the day's high. And then, of course, about a 70 point drop off from the day's high as well. So that's the picture. The Nifty Bank will end about 0.4% lower. And mid caps and small caps positive after three days basically of some serious amount of pullback. There was a little bit of positivity, although there also I think the pullbacks took a bite out of the gains. Rima.
Well, in the last half an hour, there was a recovery in the mid-cap index. So it's not ending at the day's high, but in the last 30 minutes, it did manage to put on some heft. So the mid-cap index is up 0.8%. A quick word then on the big movers and shakers on the way down. Dr. Reddy's under pressure, Asian Paints down close to about 2%. HDFC Bank struggled today, and that dragged the overall Nifty bank. And HUL saw some profit booking after yesterday's big gain. Auto was one of the big star sectors. The Nifty Auto Index up 1.5%. So Hero MotoCorp in-line numbers, but the street is excited. And BPCL goes home as the top gainer after the decline we've seen in crude prices.
And yes, and finally, today the PSU boys are telling us that their party is not yet over, because they took that breather last 2-3 days, sluggish to slightly lower. But today the PSU sectors come back with a bang. HUDCO, NBCC, REC, PFC, of course, GAIL, and it's cutting across market cap lines as well, from big to mid-sized stocks and NMDC Steel. And of course on the Nifty, stocks like Coal India having a pretty decent session. BPCL, of course, was the Nifty gainer with a gain of about 3%. So all in all, a decent session for PSU stocks as well. With that, it is curtains on this edition of Closing Bell. Many thanks for being with us, but don't go anywhere, because we will have all the market recap, plus, of course, the key cues to watch out for tomorrow coming up next in Markets Forward.